What is going on, investors? Back again, another eventful week in the stock market. Today, we'll do just kind of a recap on the market itself, focusing primarily on the tech sector. We'll jump into the charts. We'll take a look at all the FAANG stocks plus Tesla. So that's going to be Amazon, Apple, Microsoft, Google, Netflix, and Tesla. We'll jump into the charts because as we see here, the tech sector for the day was down just mildly. It was up in the early session and then kind of came back down. That's been the trend over the last few days. It's been kind of a sell the rip instead of buy the dip kind of market here the last 5 days. The last 5 days, the tech sector is down about 5%. Actually, we see for the last month, it's basically just fractionally higher. And so a lot of money has been trapped up here. If this market doesn't come back up to these highs, start retesting these highs, a lot of this money is going to be trapped up here. And so we'll talk about the impacts of that. Let's jump right into the charts. We'll talk about Amazon first. Amazon has been in a sustained uptrend here. The straight line right here is one that I drew in. And as you can see, this stock has just steadily just kind of gone up the ladder here. But just recently, like all these tech stocks, we finally broke down. And in fact, we're finally touching this line right here is a 50-day moving average. You see, the last time we broke this was actually back in March, and we came all the way down to about the $1,600, $1,700 per share mark. Obviously, it would have been a nice place to add some shares of Amazon. So Amazon, full disclosure on these, I own Amazon, Apple, Facebook, and Google, and I'm trying to buy Microsoft and occasionally Tesla as well. So full disclosure on all of that before we get too deep. So Amazon, for me, since I already have a very significant position in Amazon, I think I have about 4 or 5 shares of this, I'm waiting for a pretty deep pullback before I jump in here and buy some more. Now, if you're a new investor in Amazon, it's a stock you've been trying to get, you could probably be a little bit more aggressive than what I'll talk through here. What I don't like is we have the 50-day moving average, and today we actually were sitting right on it the day before. Today we actually broke it and closed below it. That's typically not a great sign. This 50-day moving average will likely cause some resistance on the way back up. The first level where I potentially would like to buy Amazon is down here at this 29.35 range. We see we bounced off it here and we kind of bounced off it here. That would be the first range where I'd be really excited. Even more so than that would be down here at the 25.10 level. That might be a little wishful thinking. Obviously, we're about $600 away from that price target, but we made highs here, highs here, highs here. It acted as support here, but once it convincingly broke that 25 barrier, it was off to the races for Amazon. So that would be an area where I particularly would get aggressive, definitely buying a full share, since it is still pretty expensive stock at that $2,500. Now, moving on to Apple, you actually see I have this is my swing trading portfolio here. I tried to buy 3 shares of Apple today at 110.01. Unfortunately, it didn't fill. Now, I will say I did grab a few shares in my retirement account because the 110 level where Apple bottomed out today was the level that I was targeting. These lines here I've had in here for at least a week now. 110 was our very first point where Apple could be bought. Now, I don't think you want to necessarily be super aggressive at that level because as you see here, we're in a downtrend now with Apple. Just like Amazon, we were on this trend line. It hugged it beautifully here for a while. Then finally, they announced that split and a lot of retail traders came in here and bid this thing up probably a little higher than it should have been. And now, boom, it's come back down. These people's money is trapped now. And so these people are feeling the pain. And so it's going to be tough for this stock, I think, to kind of jump up over the short-term trend line that we're making here. Now, unlike Amazon, this blue line here is our 50-day moving average. We haven't touched it or closed below it yet, but we are hovering right on it. So I'm anticipating either a break of this line and then coming probably down to the $100 range. That's where I would be much more aggressive with Apple. Now, they do have an event next week where I think they're announcing a new watch and maybe a new iPad. They're not announcing the phones yet. That'll be next month, although those events typically don't drive the stock necessarily up or down as much as like earnings and some other announcements that Apple might make. Those are typically priced in pretty well. So Apple, I think you can be mildly aggressive. If you're like me, I think I have about 40 or 50 shares of this. Mildly aggressive at this 110, hoping that this short-term downtrend that's all it is. We'll kind of hover out here. I don't anticipate this stock like snapping back and coming back up to these highs at 136 237. I expect this money to be trapped here for a little bit. If anything, I would anticipate the stock kind of going sideways, hitting its head on this average, this trend line that I've made here, maybe hovering on the 50-day moving average. But if it happens to break down, I will be a little bit more aggressive as we come down lower than 110. This $100 mark to me is an interesting one. Microsoft is one I've been really paying close to. Again, just like Apple, we've had these two trend lines in here a little bit. The $200 mark, I think you could open up a position there. That would be a neat spot. I think even better down below that is like 187, 188, 190, call it anywhere in that 190 to 200. I think this is an interesting spot. Again, if you think this is not just a trend reversal, that we've just kind of broken our trend line, reverse trend a little bit, we'll trade sideways a little bit, the news will get better, and the stock will resume an uptrend. I actually don't necessarily know if that's the case because we've got an election this year. There's a lot of things going on. This could be a trend reversal and these stocks could be heading lower. That's why I wouldn't necessarily, when I point out these zones, I'm not saying if you have a $1,000 account to just go unload the whole thing. I would be very, very gently, especially on a $1,000 account, very gently coming into these stocks and very gingerly, in fact, because as we see with Microsoft, we've got this long trend line here, but then it broke it here. It actually broke it sooner than Apple and Amazon did. And we went sideways and we popped up, tried to break it, didn't, got rejected again. We came up here, got rejected again. That's not a good sign. And, you know, now Microsoft is kind of in this short-term downtrend. We'll see if it's able to kind of break this and come back up. But I would, again, expect once Microsoft hits up here in this 230 range, even touching these highs, yeah, right in that 230 range, it's going to be tough for the stock to break above that without any super positive news, not only from Microsoft, but the market in general. Although we see the MACD starting to bottom out, it might start to turn here pretty soon. The RSI on all these stocks has bottomed out. That's typically a good sign. If you want to step in early, again, I think the 200 to 190 range is where you could potentially, again, if you don't think that this is a temporary kind of sideways move, that like Microsoft's in a sideways move here. And so if you think that's temporary, we're going to move back up. I think right in this range, it would be an interesting spot to grab it. Now, Google also looks quite a bit like Amazon, actually, where we started this trend. We actually looped way above it, looped again, almost some Elliott wave theory stuff going on here. And then finally we broke trend here with Google, and we're kind of chopping around here now. This trend line, I think this downward trend line is intact. Anytime this stock is going to make a rip up, sellers are going to step in because you have a lot of money that's trapped in the stock up here. So as this stock kind of inches back up to where these people can sell, they're probably going to step in and do that. You're also going to have short sellers see the exact same thing that we're seeing here. And anytime this market has ripped over the last 5 days, it has sold off. And so that's going to be the trend traders are going to take into account. Now, I think a really great area for Google is 1475. Take a look at this. We made a high here. We made a high here. It got rejected. But then once it broke that, it acted as support here and almost like a pivot point to bounce really hard. So I really like this 1475 area. That would be the first place where I would step in potentially with Google. Taking a look at Facebook, looks a little bit like Microsoft. We see we had this long-term trend here from the March lows, but then we broke. Facebook actually broke, and now this trend line acts as resistance. Came up, touched it, got rejected, came up, touched it again, almost perfectly, got rejected, came up here, actually broke through, and a bunch of this money up here got stuck. Okay, this is all trapped money up here, and this stock has sold off pretty consistently ever since then. Now we're kind of in this short-term downtrend right now, like all these stocks are doing. This stock actually came into a zone where I like it. I'm way overweight Facebook. I don't know how many shares I have, it's because it's across 3 or 4 different accounts. So this one would have to come back quite a bit for me to really get excited. But if it's a new stock for you, we're actually in a zone on this one where it could be potentially interesting. I wouldn't open up say you wanted $1,000 worth of Facebook, which would, I guess, would be about roughly 5 shares. I wouldn't buy more than a share in this zone between, we'll call it 256-ish and, about where the current price is, around 266. So we're kind of in a zone here, even more attractive than that would be to bottom out here between that 247 and call it 257. Somewhere in this zone would also be interesting. Although again, if it breaks this zone, we've got this big gap here. So this stock, in my opinion, looks pretty weak. This one could come all the way down to the 230 range. Again, this is a stock that's, could be a political whipping boy over the next 2 months, especially depending on what happens in the election. I think either side is going to blame Facebook for whatever reasons, whether they have any part in it or not. I think this is a stock that could become a political punching bag over the next few weeks and months ahead. So I'd be careful a little bit with Facebook, but there's a really interesting zone down in here from 247 to 237 if this stock particularly breaks down. This is personally, since I'm already overweight Facebook, and maybe you are too, this is where I'd really be buying significant a portion of Facebook, because we've got a lot of bars here in this cluster. So there should be a lot of demand here for the shares here. Whereas it's a little more scattered here. You're gambling a little bit more here. I mean, you're gambling with all this stuff, but a little more solidified right here with Facebook. Now into Netflix, a stock that I don't own and I don't particularly want to own because I have exposure with AT&T and Disney and a few other stocks to the media realm. And so I don't necessarily need a full picture into that with Netflix, but there's a price for everything. And quite frankly, this thing actually looks like it wants to keep going down. It's particularly weak in my opinion. And this thing looks like it wants to go lower. We're in a very, very steep downtrend here with Netflix. They've had some negative news. I think it's more market related, but they released a documentary that's been kind of controversial. And so we'll see what happens with Netflix, but there are some prices where I think I'd be really likely to step into this one, probably somewhere in this range down here at the 450, 455 range is a really interesting spot. Now I have some other zones here, but we've actually already closed into them. This zone here between 489 and 469. This is an interesting one if you want to step in here, and then even a little bit below that from the 450-ish to up to the 470 range. That's another one as well. Although if it breaks this, it's probably coming all the way back down here to close to the 400, 410 range. So this one almost looks like it's made like a little bit of a double top. We've got a nice little trend line here. It bounced off it, but then like Microsoft and a couple other ones, it broke, but then it made this big candle all the way back up. Looked like it wanted to resume trend and then got rejected again and has come down here. So keep an eye on Netflix if you want to add to it, or if it's a position you want to open. I would tiptoe into this one, but we're coming right here. There actually should be a lot of support for this stock right at this 470, which is about $10 lower than it is today. So if the market's weak again next week, that 470 mark for me would be an interesting one. I might even step in here on this one, just depending on the note of the market and how things feel. Now, finally, last stock we'll cover today is Tesla. So, Tesla is one of those ones where it's actually a little bit different than all the other ones. The other ones are all in a defined downtrend. Tesla actually kind of like broke all the way down. Tesla actually sold off a little further from the top than the other ones and hit its 50-day moving average and then bounced and we're kind of hovering right here. We actually kind of broke above this downward trend line. I would say we're still in a downward trend here, but you could look at it from a shorter term time frame and say we're coming back up. This MACD appears like it wants to bottom out. This RSI does too. So Tesla's one of those one. I still wouldn't want to jump in head first on this one. We're very, very close to where if you want to open up a very small speculative position in this one, it would be interesting. I definitely wouldn't be aggressive up in this area because Tesla can be more volatile than these other stocks can be. I mean, they're all pretty much very volatile stocks. I think what's possible is Tesla made this big move here and then we kind of went sideways and then made another leg up. I actually think that would be healthy for the stock and actually the shareholders as well. If this stock kind of chopped in a range here, it would allow some people to acquire this stock, the technicals to reverse a little bit, and then it could resume an uptrend. I think if this stock were to snap back, you'd have some money up here looking to sell, but it would all be speculation based as well. And that's typically not good if you're a new shareholder, you're a new stockholder, you don't have a lot of experience. You might end up getting trapped in what might be like a double top or something like that with Tesla. So not as bad technically with Tesla. I mean, I think a great spot to have bought this was in this 330, 335 range, right in here earlier in the week, even on this candle right here. And it's broken up. It's had a little bit of strength. It's popped in usually in the early mornings of the trade and it's come back down as trade goes on. That's just showing me there is a lot of people that are stuck up here holding a bag. And as this stock moves up a little bit, they're stepping in and selling this stock. So that was Tesla, Netflix, Microsoft, Apple, Facebook, Google, and Amazon. Eventful week. We'll see what happens next week and going forward. Again, we're getting closer and closer to the election, which I think really could play with the markets as well. So I think anything that you do over the next, I think it's about 50 days away from November, I think you just want to tiptoe a little bit. I definitely wouldn't be pushing all your chips in the middle, but you know, getting in there, getting out, if that's what you want to do, certainly would be advisable in my opinion. There's going to be a lot of volatility, I think, from now until the end of the year. You just want to be careful and be mindful of that when you're starting and closing positions. So there we go. Hopefully you guys enjoyed this one. We'll be back again this weekend. I've got some exciting videos that I'm working on. Hopefully you guys enjoyed them. Thank you so much for everybody that has subscribed and liked and comment on a video. Really means a lot to me. We'll see you guys again soon. Good luck with your investments.